Hey guys, can let's see, can everyone hear me properly? Mark, yeah, of course you can't hear me, man. I was still quiet. Are you guys, man? Hey, Mark. Hey, Dr. P, Marcelo, Vitor. Yang Chang, nice to see you again. Wasim. Now Adam Hazel, nice to see you as always. We got Munga, we got Bleach here, Saida, Ramona. Oh, got all familiar names, man. Adam Roberts, Robin Shekel, right, Banamia. Okay, just like Pauline. Hey, biggest fan. Nice to see you, man. Nice to see you guys. Eddie, Leandro, Joa, Martin, Fabio. Whole bunch of you guys coming in. That's awesome. That's awesome. Right. I'm just curious. Um, where are you guys tuning in from? We got Azam who's tuning in from KL, right? Wasim, I assume you're tuning in from Wales again, if I remember correctly, right? Branimir, Croatia. We got Joa from Switzerland, UMass from UK, Elijah from Cape Town, Melbourne. All right. Who's from Singapore? Who's from Singapore? Oh, Yuan Chang from, yeah, Melbourne. That's right. That's right. Melbourne. Robin from Australia. Hope things are doing okay there, right? Australia's Sydney, Melbourne. Yeah, it's the lockdowns are not doing very well. Hope things are picking up there. Stanford from Cape Town. Isle of Wight. Okay. That's in the UK, Steve. Awesome. Frankfurt. Okay, awesome. We got London. We got South Africa, Sweden, Zambia. Okay. Yeah, I'm from Singapore, Joe. I was just wondering whether if there's anyone else in Singapore. Hey, Tuna, nice for you to tune in. Simon, is it Simon or Simon? Nice to see you again. Ifyani, ever present guy over here. Awesome to see you. Awesome. Okay. All right. Beautiful place near beach. All right, Luis. Okay, nice to see you. Thanks for tuning in. Mafon. Right, guys. All right. So today's session is on multi time frame analysis. Okay, it's you see me use it a little bit in our live market analysis sessions every Wednesday, right? But today I'll be breaking it down to you for you, and because I was getting a lot of questions like, should I look at the M1, M5, M15? What time frame should I look on? How far should I go? Right? If I'm looking at a 5 minute chart, should I go to 1 hour? Should I go to 1 day? Right? So we're getting a lot of questions around that. So today's session is designed to answer those questions, help you incorporate a multi-time frame approach, right? And contrary to popular belief that a multi-time frame approach should analyze everything, right? There are actually certain time frames which are better when they are combined together, and there are certain time frames which they might be a little bit too far apart, right? So today's session, what I want to encourage you guys to do, right, is that I literally have another screen that's open by my side, right? If you have questions, send them through. The regulars that are here, you guys know the drill, right? Very often we hardly have any time at the end of the webinar to answer questions. So I encourage you to ask me questions along the way. Sajid, yeah, you know my drill. Right? So yeah, let's begin today's session. All right, quite a number of you guys tuning in. That's awesome stuff. Right? So first and foremost, disclaimer, right? Everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. So please do your own little due diligence, before you start trading, guys. Okay. Now, moving on from here, right? Our agenda for today. Okay, our agenda for today, right? First and foremost, which time frame is the most important, right? Which time frame is the most important, right? There are people here who are fans of the 1 hour chart, 15-minute chart, 4 hour charts, right? If you have a personal favorite, please send it through in the chat area. So I can already see Vitor saying it's a daily chart. It's the most important, right? Please let me know which you think is the most important, and I will let you know whether you got the answer right or wrong, right? Mark says 1 to 4 hours. Ionita says 4 hours. Zulfikar says it's the 1 day. Saida, quite a number. Sajid says the M1 for gambling. Yeah, you're right, man. A couple of you guys are saying a daily, which is nice. I like Ramona's answer. I'll share with you what she said later. He said later, right? Ramona, is it he or she? Right. All right. Less noise. Daily to 5 minutes. She, all right, yeah, I kind of figured. I said she at first, right? I changed it to he because like 90% of traders are guys, right? So awesome stuff. Stefani, nice that you tune in again, man. Awesome to see you, right? Awesome to see you. Okay, got quite a number of people who say H4, D1. Depends on trading style, right? Swing out intraday trading, weekly to keep eye on big movement. All right, okay. Hagarty says weekly, daily, and execute on 4 hour. I'll let you know what I think about all of that later, right? I'll be showing you guys what a top-down approach is, okay? And now I'll tell you what you should kind of look out for in a higher time frame, right? How in-depth should your analysis go, right? What should you look out for? How can you better implement it, from higher to medium to low time frame, right? We'll zoom in on the lower time frames and I'll show you that is where we usually look at market execution, looking to get in on trades and stuff, right? And after that, we'll look a little bit at designing your trading strategy, right? We look at a little bit at designing your trading strategy. It's quite fun, assuming we can reach that place. All right. Okay. Yeah, I fully encourage that, Ramona. Awesome stuff. Stefani is asking, show how to do a draw Fibonacci retracement. You saw someone doing it the opposite way that I'm doing, right? That guy's doing it wrong. I'm kidding. Yeah, we have people who do funny kind of Fibonacci, right? There are even people who look at gun angles, practically looking at astrology, looking at the stars, to figure out how to do technical analysis, right? So, no one's everyone has their own little different techniques. I find the particular technique we use slightly better. So yeah, I'll show you later. Okay, nice to see you, Touch. Right. Awesome stuff. Awesome stuff. So introducing your host for today, right? That's me, Desmond Leong, right? I run the award-winning research firm, Average Fortune Group, and also the Forex Army, where I kind of do my crazy stuff there, creating indicators, EAs, writing funny guides, right? It's kind of where my playground and stuff, right? We are finalists for 2019, 2020, and 2021 for Best FX and Best Equity Research, right? So we got a pretty strong team of CFA, CMT, and CFT accredited traders and analysts within our company, right? We traditionally advise banks, brokers, hedge funds where the markets are heading, but we have a special partnership with IC Markets, to bring you guys institutional grade research and education, right? So many of the stuff that you guys have been through, you notice is very different from what you get at BB Pips, right? What you get at Forex Factory, right? So yeah, we have a pretty different approach to it, right? And we have a lot of testimonies coming in, right? People who were previously unprofitable now, have turned a corner, now you're profitable. People traders who had previously had 50% hit rates, now they're 70, 80%, right? And that's music to my ears, right? You don't need to be in the markets trading for 30 years, and old foggy, to be profitable, right? You just need 30 days of concentrated learning the right stuff, right? And that's what we're here to do, right? We don't hold anything back, right? But of course, knowledge is one thing, application is another, right? Which is why we have our weekly webinars every Wednesday, same time, same place, tomorrow, where you can tune in and, you can run your questions by me, you can practice analysis and application of technical analysis together, right? Nick is asking if I like harmonic. I'll share a little bit on that later. A lot of Fibonacci's and Elliott structure more or less is borrowed from harmonic, right? But I don't practice it per se. But I do use a lot of the structures, flip extensions and retracement from it. That's right, Junai. That's right. Yeah, Wednesday is great stuff, man. Stefani, I agree. Right. So yeah, if you guys want to follow me on Instagram, you can find me on Comfy Desmond. Sadly, I'm not one of those Instagram traders where I drive Lamborghinis and stuff. I'm a very simple guy. A lot of you guys, like I always say, you go there. Most of the time, I'm posting photos and videos of FIFA and my cat. So I take it very chill. Right, just if you want to follow me, that's my Instagram profile, and yeah, head over to the Forex Army, if you want to find the crazy stuff that I build. Okay, now without further ado, right? Yeah, without further ado, let's begin. Which time frame is the most important? Right, we got a lot of people who are saying, we got answers like the D1 time frame, we got H4 time frame, we got the week 1 time frame, we got the H1 time frame, we got the M15. Very few people said the M1 time frame, right? More people gravitated around these 3 time frames, right? D1, H4, H1. Now, guys, my personal take on that is that which one is the most important? Let's try to phrase that question a little bit differently. If your trading strategy, was on the M5 chart, right, the 5-minute chart, what is the highest time frame you would go to? Okay, if your trading strategy was on the 5-minute chart, what is the highest time frame you will go to? Okay, we got answers pouring in. We got H1, 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 H1. We got H4 for Muhammad. We got M30 from Marcelo, M30 from Kevin, H1, H1, H4, M30, H1, H1, H4. Right, so far, no one has actually said D1, for better or for worse. Right, but it's true, most of you guys would kind of stop over here. So those of you guys who initially said D1 and week 1, suddenly you're not saying the same answer when your trading strategy execution is on the M5, right? And that's a point where I'm trying to drive to you guys, right? It is not about which trading strategy, no, which time frame is the most important, rather which time frame is the most relevant and important to the current time frame which you use to trade, right? So most of you guys see the way I trade on the daily market analysis, right? Our hit rates are awesome. Hit rates are awesome, right? And you notice most of the time I look at the D1 chart, right? Lowest I go is the H4, highest I go is the 1-week chart, right? You don't normally see me going to the M5 chart, right? But yeah, because you notice I gravitate to around this tree, right? Usually I gravitate around the week 1 and the D1, right? So it's the same thing here. Sometimes your M5, you gravitate to M15, you gravitate to H1, right? Going to H4 might be a little bit far away, right? It is good to kind of glance, really just glance at it to see if there are any big levels, which I'll be showing you later. But there's a concept of a higher time frame approach. Don't go too crazy. If you're trading on the M5 chart, don't go onto the week 1 chart or even the monthly chart to try to figure out if there is this 10-year high, right? It is like freaking far away, right? And it doesn't matter because it probably be like 1,000 bars later on the M5 chart before you reach it, right? So don't get stuck in the concept, where you worry about every single time frame. There are some time frames that are like, sure, there's a big, D1, it looks like it's bullish, but because I'm on the M5 chart, how many 5-minute bars does it take to make one day? 24 times. Hey, shit, no. Let me count. 24 times 12, right? 24 times 12, at least for the 1 hour chart, at least for Forex, 24 hours a day. 24 times 12, you got a little bit more than 240, 288 or something. So it takes 288. Yeah, thanks for answering, guys. Francis, you got it wrong. Just like me, I got it wrong earlier. Right? Yeah, but 288 for the M5 chart. So you need 288 bars to form 1-day chart. So even if you see your 1-day chart as very bullish or bearish, right, you must know that it takes another 288 bars almost of the M5 chart before it forms 1-day chart. And if your trading strategy is going to just play the next 10 bars, does it really matter, where the 1-day and the 1-week chart is telling you, right? So we got kind of asking, so if I'm scalping on an M5 and I want to check the trend so that I can take trades according to the trend, which time frame should you look at, right? Normally, I will go for M15 and maybe I even go for M30, right? M15, M30, right? If you're on the 5-minute chart, if you're on the 1 hour chart, I will go to maybe the H4. Hello, can you guys hear me? Testing, can you guys hear me now? Ah, awesome stuff. Okay. Okay, thanks to my team outside, thanks to my team here. Right, welcome back. Where do you guys lose me? Right? Where do you guys lose me? I hope I wasn't going for way too long. For 5 minutes. Where do you lose me? Okay, all right. 30 seconds, 30 seconds. Okay, awesome. So yeah, previously at our when the institutional research house, right? We had a H1, we got got H1 time frame, H4, right? So we D1 weekly, the monthly, and we know that the monthly chart will dictate the direction of the week one chart. Week one, day one, H4, H4, H1. And then of course this one can go into M15, this one can go into M5 and can go lower and lower. So this is what I call kind of like a top-down approach. Now, would you say that the monthly, this actually affects the direction of this? Now, would you guys think so? Right? Yeah, that's right, It is rarely, the 1 month chart is rarely ever going to affect the 5-minute, 15-minute H1, H4. And that's the thing that we need to be careful about. It's way too far away, So important point to take note of for top-down analysis, multi-time frame analysis, there is a limit, okay? Now, let's move on. Like top-down approach, which I mentioned to you, right? Usually you go 2 levels down, okay? You don't try to go 2, 3, 4, 5, 6, 7 levels down, right? You kind of lose the uh, elasticity. I'm not sure if that's a word, right? But yeah, you don't try to stretch it too far away, okay? So that's the important thing about top-down approach. Now, like many of you guys were asking, like what is the how far up? So if you're usually with the 1 day, you stick with the 1 week. H4 you stick the day one, H1 you stick with the H4, M15 you stick with the H1, right? M5 you stick with the M15, M1 you might stick to the M5, and even to M15. So kind of keep it side by side. That usually is pretty enough already, right? You go one level, one time frame higher, just in case you might be missing something. Andre, good morning, right? You're just tuning in, you're late, man. Okay, now moving on from here, right? Yeah, so that's right, Adam, depending on the duration of the trade, right? So Junai is asking, what if you look at the monthly and we see something like Aussie is on 0.8 and historically always falls from there, right? It depends when you say historically, um, what you're referring to from a historical basis, right? Are you looking at the H4 and saying historically, or are you looking at H1 and you say historically, right? Okay, Junai, we'll take a look at that later, okay? First things first, let me share with you guys, right, what you should look out for in the higher time frames, right? In a nutshell, these are the few main things we should look out for in the higher time frame. Okay, there are the key graphical levels in the horizontal. The horizontal levels, right? They're the key graphical levels in the form of trend lines. Single trend lines, double trend lines, right? They're the breakouts. Price jang 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 jang, and it breaks out from here. Jang jang jang, it breaks out from here, right? They're the breakouts, the big moving averages. I mean, I know if you guys know the concept of natural moving average, which I shared with you guys previously, you can apply it, but it can be quite tedious, right? So usually you look at big moving averages, the 50, the 100, the 200, the golden cross, the death cross, 50, 200. We should use the 50 and 200 moving averages for. You guys know I love to look at the Ichimoku cloud more for a general overview. You don't throw on every single thing, but you use it more of a general overview to get a better idea of, where's the momentum of the markets. Look for the big Fibonacci levels. Okay, you got your retracements, you got your extensions, your expansions, and your projections. Okay, I'm getting questions on what all these are, right? So what you want to do, guys, right? What you want to do is you want to go to icmarkets.com. Yeah, do I also teach that later, right? So Nick is asking if I teach all this, right? What you want to do is go to more, right? On icmarkets.com, go to webinar, right? And you can see our team of experts over here, right? What you want to do is go to previous webinars, all right? I'm going to copy this link and I'm going to send it to you guys, okay, in the chat area. I'm gonna send it to you guys, right? Okay, so this over here, right? Most of the English webinar, actually all of the English webinar I've been doing, right? You do want to look at a couple of key ones. If you're just starting off, be sure to start an introduction to Forex, okay? And then, look at support and resistance, look at price action, look at trade management, retracements, extensions. So under retracements, we do cover extensions, projections, expansions, right? There are different terms to use for it, but yeah, click view, right? Clicking view will actually take you to a Vimeo page. The IC market is Vimeo page, right? And sometimes you even notice that I'm wearing the same shirt a little bit too often, right? But yeah, come to IC market's Vimeo page, right? You can read, you can watch all the different webinars over here, okay? Okay, yeah, you can watch our different webinars over here. If you want to watch our live market analysis session, you go to YouTube IC Markets. Okay, I'm going to paste this. I'm not going to paste it yet. I'm going to go to playlist. I'm going to watch the trading analysis part over here. This is the playlist, which I'm going to send through to you guys. So week in, week out, right? I think sometimes if you're lucky, you get to see my cat, right? You see my cat this time. There you go. See, that's my cat. Yeah, sometimes lucky you get to see the famous indicator, right? But yeah, week in and week out, we will do the live market analysis session, right? And every other week, so tomorrow I'll be accountable for last week's analysis, right? And every week we will review our past analysis, and so that there's no running away from me, right? But it's great to learn. It's great for learning, guys. Yeah, I know, Juna, cat is such a good indicator, right? Got cat scan, right? That's the first one. Maybe I should create an indicator called, cat scan indicator. Good one, man. Right. But yeah. So, if you're new, or even if you're not new, right? These are places that you can go to. You can watch the live market analysis sessions over here. You can see all the previous webinars, all the recorded webinars over here, right? And yeah, you go through all of this. Spend the time, spend the effort to go through it, and you really take your trading to the next level, right? We got enough testimonies pouring in to say that you guys have taken your trading really to the next level, and it's music to my ears, right? Okay, guys. Now moving on. I didn't find the moving average videos. Advanced moving average strategies. I guess this is the one you are referring to. Yasir, I'm gonna paste it. I'm gonna send it to you guys if you want to see the live analysis, the advanced moving average strategies. But let us not digress too far. Let us now look at this and price action. This is something new which I'm gonna teach you guys. Okay, but now let's take a look at all this together. Oh shit, sound is off. Are you guys able to hear me? Yes. Okay. So Hollander, I'm just going to reply you and say that the sound is working, man. Check your output. Okay. I'm going to create like this little sign. Then next time I just hold up. Anytime it says that someone in the chat says that the sound is not working, I just hold it up and say the sound is working, right? Because there's too many times that I try to reply the person right here, and I realized that they can't hear me, right? So so sometimes my brain's not working that well. Anyway, moving on from here, let's look at some charts. All right, let's look at some charts, guys. So for example, what I mean by price action. Okay, guys, you're looking at this, right? Does this look bullish or does this look bearish? Just okay, no right or wrong answers here. Kind of just looking at it from a limited perspective. Is this bullish or is this bearish? Yeah, that's a trick. No, okay, it's not a trick question, just a sec, right? A lot of people say, I mean, majority of you guys are saying, look, how many of you guys, not sure if you can see it actually. Yeah, so many of you guys are saying bull is a bull, it's a bullish, right? And yeah, it looks bullish here. And we are on the 4-hour chart, right? And it's true, the price, if you're going to draw a trend line, right, damn, it's going up, throw on pretty sure it's throw on an Ichimoku cloud, yeah, very bullish. Many reasons to think it's bullish. All right, guys. Now, if I change it to the 1-day chart, Does this look bullish or does this look bearish? Bearish, bearish. Graham, you're saying bullish? Hey, come on, man. Yeah, you're my longest student here. Okay, bearish, 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 not decided. Now there's a little bit more mix, right? People are just highlighting this little price action here. I believe it's like a shooting star kind of formation. Um, yeah, shooting star doji, especially two of them together, right? Two of them together forming side by side, and also it forms right at a big resistance level over here. But let's not even look at the resistance level, right? Let's just look at the price action of the prior bar, right? So we see that just by itself here, right? Even though we might be thinking is bullish on the H4, we're doing our analysis and we're like, yeah, I think it's bullish, right? There's all the trend lines, the Ichimoku, right? The blah blah blah, right? We think that price is going to rise, but just toggling, right? Just switching it to the D1 chart, would raise that little bit of caution, for us to know that, hey, this might not be, as simple as, we're just going to play all the way up. And this is usually a good way on how to, what's the word for it? On how to get out of filter out more profitable setups, right? Because naturally the trend is your friend. So the trend usually comes from the high time frame, not necessarily only the lower time frame. In this case, you think that the trend is your friend. Yeah, H4, the trend is your friend. But if you look at D1, right, the trend here might not be your friend, because if you look at this, draw descending resistance, man, this does not look good, right? And then after that, you throw, this overlap resistance, man, it really, really does not look good, right? So what initially looked good on the H4 chart, right? If you just look at one time frame higher, we look at price action, we look at overlap resistance, we look at descending resistance, suddenly, right, it just does not look that good. Correct, guys? Right, and that is one thing which I want to share with you guys when you're applying a higher time frame approach. If anything, before you take a trade, guys, before you take a trade on any time frame that you're looking at, right? If you're going to take a trade on the H1, look at it at H4. If you're going to take it on the H4, just go on time frame higher on the D1, just to expand your horizon, right? Expand your view on is there something? Am I having a little bit of a tunnel vision, right? Am I just convincing myself that we're bullish and we're expecting price to go to the moon, right? Just going one time frame higher, right, will help you avoid a lot of this. In this case, you're looking at this from this perspective, and let's just play and see what happens after that. Yeah, suddenly this bullish move does not seem so nice, right? Suddenly this bullish move that we thought on the H4 chart, it just plummeted, right? So when this happens, people are gonna say, oh man, right? The market is against me, right? The market, all the 101 reasons you're complaining about the market, right? And it's because it's not because of the market. The market honestly doesn't care. The market doesn't care if you're long. The market doesn't care if you're short. The market does what it wants to do, right? So most of the time, it's about giving the market that due respect, right? That let's not just be tunnel vision looking at H4 time frame, because the majority of traders do not know how to look at the higher time frame. And that's the truth. The majority of traders do not have a healthy respect of the higher time frame, right? Francis, you caught it right. Lulian, you caught it right. That's awesome, right? I'm glad a couple of you guys caught it right. But it's not whether you caught it right this time, but where but rather, right? Because it just might as well have went up, right? It could have went up. All we needed to know was to check on a higher time frame. Even if we check on the higher time frame, the 1-day chart, price could, very well have still went up. However, remember, trading is all a game of probability, right? It's all a game of statistics, a probability, right? In this case, right, we have a descending resistance line. You got one reason, you got two reasons over here. We got three reasons, right? We got three reasons, yeah, especially the third one being the price action, why prices, might be going down, right? So 3 reasons versus maybe 1 reason on the lower time frame you expect it to go up, right? So 3 versus 1, right? It's all a case of probability, right? Yeah, there are more reasons to say that it's going down than it's going up. So just you play a law of probability over a law of large numbers, and that's how you kind of make money, right? Yeah, that's right, Junai. Junai said it very well. The market can stay irrational longer than you can stay solvent. That is true. That's absolutely true, right? So this is should say this one. Yeah, so this is what I mean by price action. Looking at especially the prior bar, right? So sometimes the damn it, the prior bar might not even be saying much. It could just be any normal bar, right? But it pays to kind of just look at the prior bar and see, because that's how price action works, right? Price action is we got past, we got we got past, we got present, we got future, right? So price action usually happens in the present, right? So in the future, we got a little bit of Fibonacci, we got Elliott structures, we got a little bit of harmonics, we got stuff that does price projections. In the past, we got stuff like moving averages, we got a little bit lagging indicators, but in the present is where the price action is, right? So usually then when you look at the chart and you're like, man, the bar right before me, right, was a super bullish engulfing bar. That gives you the momentum you need to kind of ride up, if you're in the same direction as the engulfing bar, then you can play to your advantage, right? So that is the concept of how you can use a prior bar's price action on a higher time frame, to dictate your trading strategy on a lower time frame. Okay, now some of the things I'm talking about, like looking at key horizontal levels. So Francis is asking, do I pay attention to engulfing patterns, right? I'll pay attention to a couple of the key price actions. What are the key price actions we're going to look at? We're going to look at there's a pin bar. First and foremost, I recommend you guys to go into my IC Markets webinar where I did price action, like a crash course. Freaking hell, man! A crash course into price action, right? And I talk about my top single, double, and triple candlestick patterns, right? We got the 3 black crows, 3 white soldiers. Yeah, 3 black crows, 3 white soldiers. We got we got tweezer bars. We got gravestone doji, we got dragonfly doji. The main ones I'm looking at. I don't look at the really more exotic kind of price actions. Yeah, hammers, right? Hammers, inverse hammers, shooting stars. Those are things I look at. Some are not so applicable in Forex, because you notice in Forex usually the open and close are kind of similar. So what looks like a shooting star on the stocks, damn it, what looks like a shooting star, shooting star candlestick pattern, you need to modify it a bit for Forex, because Forex usually doesn't have the big gap. Right, so what I mean by that, let me just pull out a quick example for you. Shooting star candlestick. So you got a shooting star candlestick. Most of the time when you look at it, right? Let's see. Okay, maybe you call it something like abandoned baby candlestick, right? I swear this is like very morbid terms, right? Abandoned baby, right? So you see, there's this big gap over here, Usually in Forex, you don't have it, right? Why in Forex you don't have it is because of liquidity, because we don't have that market close from 6 p.m. to the next day morning at 8 a.m., right? The Forex is 24 hours, so usually you don't have that big a gap when it comes to, so you need to modify your price action a little bit, okay? Oh yeah, maybe 1 minute time frames you see a little bit of a gap. 1 day time frames maybe a bit because of the weekend, right? So yeah, maybe over the weekend you might see a little bit more of it. So yeah, definitely things to take note of. Now guys, again, let's not digress too far. Key graphical levels to kind of look for, right? So one of the examples I showed you, was like in this case, right? Support and resistance, right? We know there's a horizontal swing high, horizontal swing low, pull back and overlap. What do those mean? go to the webinar and read it and watch it. I'm so glad IC Market records every single webinar we have, because I feel that you instead of me trying to explain it each time, right, it's a really great resource you can go to just just to kind of learn, right? So yeah, head over to IC Markets, and of course over here, right, there is the introduction to support and resistance. This is where you talk about overlap, pullback, swing high, swing lows. Yes, recorded webinars are awesome, Andre. I fully agree. Right, so let's look at one of our most profitable trades over the last 1 or 2 months. Every week we've been calling it correctly, right? And that is that is this thing here, which is what is it? Oil, crude oil, right? So crude oil, most people might think that, okay, crude oil, we're expecting prices to go up further and further and further, right? But at key areas, we actually caught the reversals. We actually caught the reversal at key areas. If you watch our live, sorry, I'm losing my voice. If you watch our previous live market analysis, we called the reversals here really nicely. And how we did that was actually through looking, respecting the higher time frame, right? So I'm looking at 1 day chart. Of course, I would look at a 1 week chart, and then I notice, right, that there is one big level over here. You notice, right? And there's one big level over here. So even though price might be on a bullish, might be on the rise, that doesn't mean that you need to only play the move up, right? You can equally play, the move down, right? The kind of, it's like the price can go up, but you play the reversal, contrarian style trading. Price going up, you play the reversal, right? And how you can do that is really, especially on the higher time frame, it is really scary how many people are looking at these levels, right? The hedge fund, the asset management firms, the banks, a lot of them are looking at these key levels. And once these key levels are reached, they go flat, they close out the positions, and it drive the, it just cause a big reaction, right? So who wants to bet that this up here is going to be a very big level, right? It's going to be a very big level to look at, right? If you just do and not only is it a big resistance level, so you notice in my explanation that you kind of look at some key Fibonacci levels, right? Again, go through the webinar, right? We talk a lot about retracements, extensions, expansions, and projections, right? So come in here, right? We just do a big Fibonacci retracement. Who knows the Nike tick, my favorite Nike tick formation, and lo and behold, right? It is 127%, my favorite Nike tick kind of retracement. I'm getting good at this little tick thing. Yeah, look at my drawing so smooth, right? Now 127% right at this key resistance, right? So, right, we don't only have a big resistance over here. We got a very strong 1 to 7% Fibonacci retracement that lines up there. Okay. Now, what if I just zoom back a little bit more? Is this another big level? Suddenly, one thing I always like to do is I notice that this level here, it is a big level from the past, right? Why is it a big level from the past? In fact, I can even drag it back even further to here, right? Why is this a big level from the past? Can it go even further? Well, it can't. Right? Yeah. So what? Don't be crazy, but yeah, you can actually even go further here, but I prefer clearer price movements. But you can see how price historically respects all these different levels, right? So we can see that price previously reacted off this level, price bounced off this level, right? Price reacted off this level. So how many of you guys want to bet that when price comes up here again, along with the 1 to 7% retracement, we should at least see a small reaction to at least a 23% perhaps, right? But that's the benefit of looking at it from a higher time frame, right? You don't see things on the lower time frames, because even if I was on the 1 day chart, I try to go all the way out there, I'm even able to see something. On the H4 chart, I think I can't go any further beyond here, right? As much as I try, I cannot go further, and I'm limited, in some sense. If I'm looking at the H4 chart, I'm just looking at this, I'm like, wow, this is so super bullish, right? I think price will continue rising, right? And because I'm not able to see on a higher time frame, I don't realize that, hey, wait a minute, I'm actually on a big resistance level right here, and on top of me there's a bigger resistance, right? So that's that's right, Jonah. Can play a quick reaction off that level, and yeah, so this is one way where you can apply higher time frame. Look for the higher time frame key graphical levels. You look at a higher time frame, big Fibonacci levels, right? And of course, a higher time frame, for those of you guys who like the Elliott wave analysis, right? Usually there is something like where is that thing? It looks like we're looking at a one, two, three, four, five Elliott structure here, right? Why I particularly highlight that is because this is a correction, and this correction is steep, right? So in the rule of alternance, right, if the first wave two correction is sharp, is a zigzag, wave four correction is slightly sharper, right? So we could be expecting a wave five here. What is one of the price projections of wave five? You take your starting wave one and you project it up to wave five. And what we notice is that the 100% extension is up here, right? That means the distance of wave one could be the same as the distance of 4 to 5. And it lines up here, it lines up here, it lines up here, it lines up here, it lines up here. So high probability setup, yeah. I think so. It's probably gonna be a pretty high probability setup. I need to go for that speed reading enunciation questions, man. Sachin is asking me to share my screen. Are you guys able to see my screen? I hope you guys have not just been looking at me all the time. Yes, okay, awesome. Okay, so Sachin, yeah, my screen is visible. I hope you haven't been looking at just me for the past 40 minutes, okay? As flattered as I may be, right? But that wouldn't be the main point. And that is another reason why we have recorded webinars, guys, right? Okay, so so the other things that we look at, Ichimoku, big moving averages, breakouts. Let me see. Yeah, okay, that's zooming in on lower time frames. But what I mean by that, okay, just go remove everything. So in this case, let me just pull up a chart. I guess it's the if I look at the H4 chart for pound dollar, for example, right, we notice that there is a breakout. There are two kinds of breakouts that are happening here, and I am not drawing correctly, right? The first breakout is kind of over here, right? So we are already seeing a channel breakout, a pretty nice channel breakout. So we have a little bit, this channel breakout over here, and a graphical breakout pullback, right? So we got two different breakouts, right? First, whether you call it descending resistance, you call it a channel breakout, right? We got my analysis on this is we got a bullish breakout on pound dollar. We got a pullback to a key graphical overlap area, and I'm gonna bet that it's a key 23% retracement. True enough, it's a key 23% retracement that it bounced off. So, and we're just gonna throw on the Ichimoku cloud, and then there we go, right? So a tip for people who use Ichimoku cloud, right? Just remove all the other crap that you see, right? So it kind of just filters down to the cloud that you're looking at, right? To the main cloud that you're looking at. Okay, I'm just going to pull it out over here, right? Main cloud that you're looking at. And we can see that it has broken out of the Ichimoku cloud. It's on 23% retracement. We got bullish momentum from the channel breakout. We got bullish momentum from the 23% retracement. We got bullish momentum from the overlap, right? So we naturally would have a little bit of a bullish bias. Okay, now bullish bias. With that in mind, that we're bullish bias on H4, do you go to the D1 chart or do you go to the H1 chart now, guys? Which time frame do you go to? I see a couple of people saying D1. Ramona saying D1. Lulian. Oh man, so many people are saying D1 chart. We got Saida saying H1. Why are you guys saying the 1 day chart, right? If you're bullish on the H4, why are you going to the 1 day chart? just a confirmation of the trend for perspective. Key level. Okay, you're right. Actually, it's a trick question. You should go both ways, right? You should look at the big and the low time frame. So what I like to do on the D1 chart, right? Just to be careful, okay? D1 chart, I come in here and I'm like, okay, I am originally expecting prices to come all the way to here. Am I being overly optimistic, right? First thing I straight away notice, right, is that this happens to be a key resistance level, right? This is not just any level I'm playing to. I'm playing to a pretty strong level, one big resistance level. The next thing I notice, of course, when I do my little Fibonacci retracement, same thing, guys. What do you notice? 61.8 retracement right at there. Third thing I notice, right, there is a Ichimoku cloud resistance over here, right? Now, okay, right, it's not like I'm over here where price is like a super big high resistance, right? But this helps me guide my my potential on how far I want to play up from the H4 chart, or even the H1 strategy, right? Now that I know, so okay, I'm going to play bullish, I'm going to be bullish, right? I know that I should not play beyond this level because this level is not any normal level. And in fact, I think if you do a Fibonacci retracement, it is a 127 retracement right there, right? So there's a lot of resistance over here. Even though I'm bullish on the H4, I will not play up to, I will not play beyond this level, okay? And that, my friends, is how you kind of use the higher time frame to have a guiding principle behind your H4 trading strategy. You could zoom in further on H1 chart, right? So on the H1 chart, you can try to look for an entry, right? So removing everything, right? Removing everything. H1 chart, if you're looking for an entry, right? So maybe on the H1 chart, you say, I am bullish, right? But I'm only bullish if price is able to cross above this level, right? I'm only bullish if price is able to cross over this overlap, is able to cross above this Ichimoku cloud area. This Ichimoku cloud area, right? And only then do I trigger my move up. So you don't necessarily need to be bullish right now, right? Or you can be bullish looking onto buying on weaknesses. Maybe you notice that this is a good support level to buy from, so look for there and you play up. But naturally, you're guided by the H4. You're guided by the H4, knowing that price will likely rise from here, right, up to maximum over here. You won't play it beyond here. Why? It's because you look at the 1-day time frame and you really filtered and avoided the key levels to watch out for. Just applying this approach will help you a lot in filtering out more, bigger levels, right? Too often, too often imagine if you're just looking on the H4 chart and we're thinking that or maybe just the H1 chart, and we think price is rising, is making lower higher lows, right? And we think that it's just going to continue rising beyond this level, right? We give too little emphasis and importance on this level. What is the history of this level? We don't know, right? But once we go in the H4 chart and you know that, okay, this was where a previous reversal happened, we go into the 1-day chart, it's like, okay, not only a previous reversal but multiple reversals overlap happened, and a big Ichimoku and a big Fibonacci retracement and a big a Nike tick kind of Fibonacci retracement, then it helps us make more wiser decisions. Is that a word, wiser? Yeah, wiser decisions, right? And hence more profitable decisions, right? But anyway, let's see some of the questions coming through. Do you look at so Juna is asking if I do look at the fundamentals. If I am looking at the H1 at the D1 chart, I rarely ever look at fundamentals from a D1 chart because especially the economic news events, because the economic news events, right? Let's just look at a Friday, right? The first Friday of each month. So the first Friday of July was the 2nd of July, right, where non-farm payroll was, right? So if we're gonna look at the 2nd of July, where non-farm payroll was over here, right? So these are super big news events, right? And the June the 4th was June's non-farm payroll. I'm just gonna bring it there. Now, I'm gonna remove this. Zoom in, zoom in. Now, look at these bars over here. Do they look very important, right? If you're looking at 1-day chart, would you look at that and say, wow, non-farm payroll is coming, I should be concerned, right? You're just, you're looking at that and you're like, it doesn't affect you much on the 1-day chart, correct? Even though it's the key news event of the entire month, the non-farm payroll, the highest volatility, but you're just looking at it here and you're like, this is nothing much, right? And that's the beauty of sometimes the higher time frames. Because if you do look at it maybe on the lower time frames, like you look at it on the M15, the 15-minute chart, right? So I'm just gonna, I'm just gonna find my find that damn line I drew, right? So I'm guessing the non-farm payroll was probably around here, blah 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 blah. Yep, probably around here. Price really went crazy over here, as you can see, right? So it affects it a lot more. It affects it a lot more on the lower time frame, right? And I bet if I go back far enough, oh damn it, man. If I go back far enough, right? True, the non-farm payroll, 3rd of June. I'm not sure where is it. 3rd of June. Yep, probably over here. This is probably where the non-farm payroll happened. Yeah, crazy movements over here, right? So yeah, on the smaller time frames, damn it, the economic news calendar is very important. But on the higher time frames, you look at it and it's just another small little bar that don't mean much, right? But that doesn't mean, from a higher time frame, if you really do want to apply like so-called fundamental analysis, right, you need to look at the broader picture. You need to look at how the country is performing, right? Long-term plan, what's going to happen 3 months later, what's going to happen 1 month later, right? So you guys notice when I do the 1-day chart, it's usually 1 week by 1 week. So the calls we make last week, whether they're still valid now, entirely different stories, right? Some of the calls work out well, some of the calls didn't work out well, right? It's always quite interesting. Those of you guys who was following our euro dollar move, remember I said this was the move of the week, right? We're calling the bounce on euro dollar because there's, it had a breakout, it had bullish divergence, it was an ascending support, it was an 88% retracement, and true enough, it bounced up and hit our profit target, right? Same thing, this happened in 1 week, right? So sometimes it depends on time horizon on how far you're on trade. So Fabio is asking fundamentals like COVID on D1 matters for the trend. I guess if you're looking at fundamentals for COVID, things that you can consider are yes and no. It's a little bit hard because it's a little bit priced in already. But yeah, COVID fundamentals, maybe you want to look at. We have to monitor the case counts in England very closely because of Freedom Day, right? So we need to really see see whether the number of hospitalizations go up. The number of hospitalizations go up even though the cases are going up, because if England is able to keep their hospitalization cases low while their number of cases are going up, that gives a lot of hope for many other countries, and that means that other countries who are getting their vaccination rates up would see their economy improve, right? But how am I going to apply that Forex? I have no idea. So yeah, that's why sometimes I do kind of stay away from fundamentals. There are just way too many things that might affect how the market's going to move, right? But yeah, if you read up very broadly, non-biased media and stuff, you can apply some of the fundamentals to technicals. It is naturally better. I would recommend it. For me, I focus a lot more on the technicals. Okay. Ionita is asking what inputs I use for Ichimoku. I use the standard settings, right? I believe it's nothing special. I don't have special settings for Ichimoku, right? Just really 26, the standard stuff, right? Junaid is asking if I can take a quick look at Pound Aussie. Join me tomorrow, Junaid. Right? Join me tomorrow, right, guys? So tomorrow's session, right? Tomorrow's session will be on same time, same place. I'm going to give you guys the link, right? It is on the live market analysis. Copy link address and go paste it over here. Yeah, I know you're always here. Right? Yeah, join me tomorrow in tomorrow's live market analysis where I kind of take on the markets, right? It'll be a fun session, right? We will look at every single market together. We'll make some nice calls. Some of my trades did not turn out too nice. Some of them worked out really great. Yeah, but we will review the trades that worked out well, our mistakes, where to learn from, what worked out well, where we made money, right? And we'll make our calls for next week. Okay, very, very exciting times because this week is non-farm payroll, of course, right? Anyway, guys, nice to see a whole bunch of you guys, right? Oh, Jermaine, if you want, I'm just gonna send you, I believe it is ICM 20, right? If you want to get the indicators and EAs. Thanks for supporting the Forex Army. All right, so guys, anyway, I'm gonna run my usual poll. This is, of course, what we need to do with IC markets, right? Please rate the webinar from 1 to 5, 5 being great, 1 being terrible. Don't worry if you rate it as 1, I won't hunt you down. I might hunt you down, right? But yeah, at least let me know what you think about the webinar, how I can improve, right? Especially because we're always trying to find ways to improve, better deliver the webinar for you guys, right? And help you take meaningful steps towards being trading profitably, right? Oh, Andre wants me to share more about my drinking. Yeah, I thought someone was going to send me. Who was the person that was supposed to send me whiskey, right? I said I wanted PT whiskey, right? And he almost sent me peanut butter whiskey or something, right? Yeah, yeah. We have been distracted a lot. Awesome stuff. You want to see indicator? We'll be see it tomorrow. Okay. Thank you so much for thank you so much for sharing results. All right, it's nice to see that we got about 94% rate of 4.5, right? We got 4% who rated 3, good, neutral about it. Do let me know how I can improve. I'll always find ways to improve. I welcome all feedback, right? I see 1% at 1 and 1 2. Don't worry, it's completely anonymous, right? So yeah, that's it for me, man. Andre is saying give me 4 because I didn't talk about my dog. I will talk a little bit more about my dog, right? I do see him once a week, right, at my parents' place. But yeah, okay, guys, okay. Yeah, Junai, are you the one always giving me a 1? Adam's accusing you, man. Anyway, guys, it's always awesome. I think tomorrow will be a slightly more chill session. We can have a little bit of drinks. This is a little bit more herbal drink, right? I just got to take care of my health a little bit more, right? But yeah, I will. Haram, you guys are full of nonsense, right? Thanks, Jacek. Thank you, Joa. Thank you, Junai, Nick, Nal, Andre, Saida, Adam, a whole bunch of you guys, right? I will see you guys. Oh, Adam is a housemate. Awesome. Okay, I'll see you guys tomorrow, right? For now, trade safe, stay safe, and peace out, guys. Okay, adios and bye-bye. See you.